Kumar Subbiah, he's CFO at CEAT, joining us this morning. Before I come to Camso, Mr. Subbiah, first give us a sense as to how price hikes are playing out. You suggested at the end of Q1 that the price hikes will happen. 11% and in fact already happened on replacement on the replacement side of things. Another 4 to 6% was targeted soon. How much of that has translated, sir?
Good morning and happy to be part of your morning session. Price increases have been happening in line with our plan. In the month of July, in replacement segment, we took a price increase of about 5.5% from the beginning of the month to the end of the month. We are planning another 2% kind of a price increase in the month of August. We have already made announcements. So cumulatively from 1st of April till end of July, almost about 11.5% kind of a price increase has happened in replacement segment. We also managed to correct our prices with OEMs in the order of about 11 to 12% effective beginning of Q2. And more to come, I guess.
I want to look at the big picture here, Mr. Subbiah. You said 16 to 18% was the kind of QOQ increase in raw material costs in Q1 FY27. How much of that pass-through has already happened? Because you've clearly said there won't be a rollback. So that pass-through, and if at all rubber prices were to come off, will be completely margin accretive for you, is the way we think of this. But how much of that pass-through has happened?
In Q1, you're right. Our cost increase was in the order of about 16 to 18%. Okay, and 16 to 18% on our raw material cost. So that required about 10.5, 11% kind of a price increase. And that part of the price increase we have already taken as of end of July. Okay, and even in Q2 also, we did indicate in the last quarter call that we are expecting a cost increase of about 8%, 6 to 8%. And therefore that needs to be covered. So therefore, it's happening progressively over a period of time. What the increase in raw material cost in Q1 has been recovered through price increase in the replacement segment on cost to cost basis. So in the sense that cost per kg basis. And what has happened in the Q2 or what is happening in Q2 is work in progress in terms of further increases in prices.
Give us a sense on the consumer, demand. Are you seeing any, deferral of demand coming in because of the price increase which is happening in the replacement market, or is the market able to absorb this cost?
No, the market has absorbed price increases. I can't remember in the last decade whether we have taken this kind of a price increase within a short period of time. So far, market has absorbed till July. There are some cost sensitive, cost conscious segments like commercial category of tires where the price increases have been steep, and it's possible that there could be a small reaction, a short period reaction to price increase. As of now, as of end July, in passenger segment, the market absorbed. In the commercial sector, I think we would still like to wait and watch whether market will have any reaction to the price increase.
Is this price increase which has taken place able to offset all the margin pressure which you were indicating that it may come in Q2?
No, we have recovered the impact of raw material costs that happened in Q1. So far, by end July, progressively we have adjusted the prices. There is a further increase in the cost to the extent of about 8% in Q2. Okay, where the price increase is being planned in the month of August, later part, we are planning another 2% kind of a price increase in different categories. So we still need to have something more in the coming months, depending on market competitiveness and market's ability to absorb it. As of now, we have covered Q1 and Q2 work in progress.
And Mr. Subbiah, I'm just trying to understand how rubber prices are moving as well, right? Because I was alluding to the fact that, and you've said this in Q1, that this pass-through or this increase in prices is now the new normal. There's not going to be, if rubber prices were to come off, you're not going to take off the price hikes that you've already undertaken, which means that this translates to straight margin gains if at all rubber prices were to come off? How are rubber prices behaving at this point of time, sir?
No, rubber prices continue to be very high. The local prices are currently hovering about 275 rupees per kg. It's very close to a 20-year high. The rubber prices in the local market did go up to 280 rupees per kg. Off late, even international prices, which was at a discount to local prices to the extent of about 15 to 20 rupees per kg, even that has gone up. As we speak today, the international rubber prices are in the range of about $2,300 to $2,320 per ton, okay, which was about a week or 10 days back, $150 lower. So therefore, the rubber prices are holding on. Okay, to your question, we are yet to fully pass on the incidence of all the raw material costs. Okay, if the rubber prices come off, okay, I think it'll help us in terms of not needing to go ahead with any further price increase beyond a period. But however, I think we still have a catch up with respect to price increase on account of increase in raw material price cost. Whether holding on to the higher level of final product, that is tire prices, would lead to margin expansion or not, I think only time will tell. As of now, we are looking at short term. Our objective is to recover the cost through appropriate pricing.
Mr. Subbiah, do you see, latest harvesting to pick up after September, and that would ease some of the prices for rubber?
I don't think today it is purely based on the local production. This is supposed to be a season, okay, and the rubber production normally resumes from the month of May in the international market and from the month of June in the local market. Today, so it's not necessarily supply demand that is driving the prices. The rubber prices started going up from the month of March, largely on account of its sympathy towards crude oil and other commodity prices. We were expecting natural rubber prices to correct a bit after the crude corrected, but it has not happened yet. It's more a short-term gap in terms of availability of natural rubber in the place of consumption versus the adequate inventory. For example, it's taking longer for natural rubber to come from Southeast Asia to various locations where it is consumed. It's possible in the places of consumption there is a little bit of a short supply, and that could be causing this kind of a price increase. We do expect the natural rubber prices to come down. We have been expecting it from the month of July, but it has not happened. Hopefully, in due course of time, some correction is due in case of natural rubber. We are not able to predict when that will happen. Hopefully, once the West Asia war comes to an end, logical end, it's possible that natural rubber prices could positively react.
How do you look at turning around the Camso, because it came in with a negative EBITDA in Q1, especially because of the forex loss that you saw on $80 million Sri Lankan debt which was there. What kind of strategy that you have for that?
Okay, see, the forex losses was below the EBITDA line, so therefore it did impact our profit before tax in Sri Lankan entity. And I think as we had already explained, this was a currency impact in Sri Lanka on the loan that holding company, this parent company CEAT, has provided as a debt. Okay, we hope, if the Sri Lankan currency remains stable from here on, we don't expect that to recur in the current quarter if the Sri Lankan currency remains stable. With respect to operating margin of Camso part of the business, okay, I think Camso is slowly scaling up. The infrastructure is little ahead of our volumes and revenue that we have been trying to take control over. So in the sense that we have gone ahead and recruited people in the various markets. We have already contracted and set up warehouses in Europe, in the US. So the benefit of that will come once the revenue reaches a certain minimum threshold, which we hope it to happen in current quarter and the subsequent quarter for the operating margin to break even. So I think we need about a couple of quarters for us to get to the break-even level, and from there, we hope the margins would move into the positive territory.
So Q3 will be break-even as you've guided. So nothing changes on ground, right? Just getting a sense of that before I ask you on growth.
No, I don't think there is any change with respect to what we have shared in terms of our own expectation of Camso performance in the next 2 quarters over what we had shared in the last month.
Okay, you do around 90 crore in terms of monthly top line in Camso, which is annualized around 110 crore, right? Just trying to, sorry, 90 crore, which means around 1100 crore. I beg your pardon. Give us a sense, therefore, what happens in FY28 in terms of the pickup in growth?
In the way we report revenue today, I think we had explained, I just want to explain to you and the viewers briefly. Currently, we are selling whatever we have produced in Sri Lankan entity through Camso and Michelin network. As of end of June, about half of the revenue we were able to service the customers directly. And by end September, we look forward to taking that number to 90% level by the time we exit in the current quarter. And quarter 3 onwards, almost most of the revenue will flow through us directly. This was an interim arrangement that we had agreed with Camso and Michelin as part of the deal, as we had to establish our own distribution network and sales team for that. In this process of selling our products through Michelin in Sri Lanka, okay, our revenue get suppressed to the extent of about 25%. Okay, because from Sri Lanka, as per the framework, the tires and tracks are taken to the marketplace and sold through their own system with some go-to-market kind of a margin. So hopefully from quarter 3 onwards, that impact of selling directly should obviously translate to higher revenue. We look forward to reaching a number of about 10 million per month sometime in quarter 3, quarter 4. After that, I think we'll be able to share based on our own experience once we take control of entire revenue by end of September.
And Mr. Subbiah, once you turn EBITDA break-even, say Q3, Q4, FY27, how does the margin picture change? Does it go to high single digits fairly quickly? Does it take time? How does the turnaround play out? Just an indication of that very quickly.
From our standpoint, what we are currently looking at is the gross margin, okay, and the price realization. A gross margin in tire industry parlance, it means selling price minus raw material cost. As we speak, the gross margin continues to remain healthy. For the higher level of gross margins compared to the normal tires that, say, for example, CEAT sells or any other player sells in the normal segment, it to translate to a strong high single digit or a double digit kind of a margin, I think you need to get the scale. Okay, so that's what we are working on. So hopefully, if you're able to take the revenue up, when in the year 2000, calendar year in 2023, the average revenue reported per month reported by Camso, when it was handled by Michelin separately, was closer to about $14 million per month. I think once we reach the level, slowly the operating margin will start moving into a positive territory and progressively over a double-digit margin. Give us a little more time. I think we're still trying to understand the market, customer needs, servicing of customers, all of that. In a quarter or two, I'm sure we'll be able to share our own plans and how it will pan out in the next financial year.
Mr. Subbiah, completely patient and wishing you all the very best on that execution.
Thank you very much. Lovely talking to you.
Wonderful speaking. Thank you. Okay, what we'll do is slip into a very short break, come back, speak to the management of Ratnamani Metals. They had a 2,700 crore order win yesterday. Stock price had moved up. We'll try and get a sense as to what's in store and whether more orders are on their way or not. On the other side of this break, stay with us.